Welcome to NTD Business. I'm Don Ma. Federal Reserve Chairman Jerome Powell reiterated Wednesday that more rate increases are likely ahead for the central bank. Powell spoke at a European Central Bank conference held in Portugal. He says future policy actions will be driven by how the economy is performing. He says, quote, "The only thing they decided was not to raise rates at the June meeting," which was a few weeks ago. Powell also said efforts to bring inflation back to the target will take a long time. He says, quote, "I don't see us getting back to 2% this year or next year, and when it does happen, it's likely to be in 2025, he said. Powell says that he wouldn't take consecutive hikes at future meetings off the table, and that the committee believes that there's more work to do for the Fed.
We work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates, and that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less.
Powell says that he wouldn't take consecutive hikes at future meetings off the table, and that the committee believes that there is more work to do. The Fed chair also noted the possibility that the Fed's actions could bring some economic pain. He says, quote, "I think there's a significant probability that there will be a downturn, but it's not, to him, the most likely case," he says. The next Federal Reserve meeting is scheduled for July 25th to 26th. And now moving on to markets. Apple stock climbed to an intraday record high on Wednesday and was on the cusp of ending the session for the first time with a market capitalization of above $3 trillion. The iPhone maker's shares rose as much as 1% to $189, their highest ever. The iPhone maker's stock market value stood at $2.97 trillion, according to Refinitiv data. Apple's stock market value briefly peaked above $3 trillion in intraday trading on January 3rd, 2022, before closing the session just below that mark. The latest gains in the shares of the world's most valuable company follow strong rebounds this year from several of Wall Street's technology-related heavyweights. It's also fueled by bets that the Federal Reserve is nearing the end of its campaign of interest rate hikes. And, of course, by optimism about the potential for artificial intelligence. Apple has jumped 46% in 2023. The recent gains in Apple's shares have outpaced analyst estimates for the company's future earnings. The stock is now trading at about 29 times expected earnings. It's the highest multiple since February 2022, according to Refinitiv data. And wholesale giant Costco is beginning to crack down on membership sharing. The company says they've seen an uptick in non-members using membership cards that don't belong to them. A Costco spokesperson told CBS News the company noticed people were taking advantage of self-checkout by using membership cards that don't belong to them. The spokesperson discussed membership fees, saying Costco can keep prices low because the fees offset their costs. The wholesale giant is now asking for photo membership cards at not only regular checkout lanes, but also at self-checkout. The company stressed that their membership is non-transferable, and membership policies remain the same. Costco has roughly 119 million members, with the Gold Star membership costing $60 a year. And finally, U.S. year-over-year home prices dropped by the most since 2011. This is according to the latest S&P CoreLogic Case-Shiller U.S. National Home Price Index. This time last year, home prices were continuing a hot streak of more than 20% annual gains for 3 consecutive months. This was a surge that eventually peaked in June of 2022. And for more insight on the housing market, here with me is Robert Helms, veteran housing market analyst and host of the Real Estate Guys show. Now, Robert, U.S. home prices saw the first year-over-year decline since 2012, according to S&P Case-Shiller Home Price Index. Now, is that representative of what's happening in the housing market? Are homes prices actually declining?
Well, that's a great question, Don. You know, the Case-Shiller Index covers either 10 or 20 cities, depending on which you look at. And it obviously doesn't cover the entire housing market, but it does give us a good snapshot of what's happening. So I think that if we look out in general, we see that this price decline has people a little concerned, but you have to understand that's a year-over-year price decline, albeit the first one we've seen in over 10 years. But if you look at the index compared to last month, it's actually up a little bit. So part of it is that April a year ago had really good housing numbers. And so we are seeing a little bit of a decline. And I do think it's representative in certain markets of what the local economy is feeling.
Let's just say a regular home buyer is looking for a home. Would they be expecting prices higher than before?
In many areas, they do, only because people are reluctant to sell. And we've talked about this, but the idea that someone who would have had their house on the market had interest rates stayed similar has decided, I'm going to keep my 3% loan instead of getting a new 7% loan, and has elected not to sell. For that reason, there's less inventory. And when there's less inventory, certain home buyers must buy, and they're forced to pay a little higher price.
Right, this inventory, are we talking about new homes or existing home sales?
Yeah, great question. So those things are normally separated out. We look at existing homes or resale homes differently than new homes. Existing homes are where we're seeing the tightness, because we've got folks that are already in place with a mortgage payment that they can handle, and they're not sure they want to either make a lateral or upward move because of the rapid increase in interest rates.
Are we expecting prices to become lower in the near future as potentially the Fed ends its hiking campaign?
Yeah, it's interesting to watch that. One of the premises of real estate is it's local everywhere you go. So there's this concept of in-migration. Either people are moving in or out of a market every day. So markets that are experiencing net in-migration are seeing a little more upward pressure on pricing, where markets that are experiencing the other, more people are leaving the area than are coming in, are seeing prices go down. So it really does depend on where you buy, but also the financing. And your point to the Fed doesn't directly have anything to do with home interest rates, but certainly they influence the direction of rates. If we were to see some tightening, then one would hope that we'd see a corresponding decrease, probably not by that much, but a little bit in terms of home interest rates.
Now, I would assume, correct me if I'm wrong, that if the Federal Reserve starts cutting interest rates, I mean, perhaps mortgage rates over the long run would come down and more people would be open to selling, increasing inventory, and that's how prices may come down.
That's a great point. And in a market where we're feeling that very well could happen. We have folks out there that are thinking about moving, would be moving, have a reason to move, like adding an addition to the family or just needing more space, and they've been hesitant because of the mortgage rates. As soon as we see change in their favor, some of those folks are going to be ready to move, and that will probably give us more inventory in the market. How soon people snap up that inventory will be the question, because folks looking to buy those houses will be faced with the same lowering interest rates.
So spring is usually pretty busy for the housing market. What are you seeing right now in market action?
This is the most popular time to move, and the primary reason is parents don't want to disrupt their school kids from one school to another in the middle of the school year. So we see spring and summer as generally the most volume. Now, that doesn't always translate to price, but that is when people consider moving. And I think we're seeing a bit of that. The reason that we're talking about the April Case-Shiller numbers here in June is it takes 6 or 7 weeks to compile all that data. So we're always looking in the rearview mirror. Anecdotally, in many markets, we are seeing an uptick in buyer activity.
Now, if someone is looking to purchase a home, what are some suggestions you have for them?
So if you're thinking about buying a home today, I think the first thing is you have more time. You don't have that clock ticking. There was a period, a year and a half ago where if you didn't make your offer, prices went up $40,000 the next month. That's not necessarily happening right now. So I think people have time to think through. I know when we made a big move years ago, we decided to rent for a year. Even though I'm a real estate guy, I didn't know the market very well. Now, today I live in the same house that I used to rent. I just own it. So it's a different story. But I do think if people are thinking about buying a house, they just need to be prudent, spend a little time with a great realtor, learn the market first. Don't jump at the first thing you see. And if you do it right, rates may come down a little bit while you're looking.
Is it a seller's market or buyer's market as of right now?
So that's also dependent upon the market that we're in, the physical geographic market. I would say in most markets, it's a seller's market today because of the shortage in inventory we've talked about. There are some markets and some places where there are new builds where we do see competition from the builders, especially for those buyers, and their buyers have a little more lenient choices. So back to the question of where you're looking to buy, if you can work remotely like a lot of people can, then all of a sudden you have more choices than you had if you have to be within 20 minutes of an office commute.
So right now, you mentioned you have more time to think about things. Is it a good time to buy then? Because before, if you didn't make a move immediately, the price would go up substantially, as you mentioned.
Yeah, the big challenge right now is we're seeing the most disparity between renters and owners from a monthly cost point of view that we have in a long, long time. So today, if your choice was, I'm either going to buy a home or rent a home, renting might be a little bit of an advantage. Now, if we were under the scenario where house prices were going crazy and going up every month, then perhaps not. But I do think that when a family makes a decision to rent a house, they're generally going to be there for 1 or 2 or 3 years. So you need to think carefully about, is now the time to buy or not? If you know that long term you're going to be in a neighborhood, in a marketplace, in a city, then in spite of the high rates today, it could make sense to buy, especially if you thought that sometime in the next few years rates would come down. Because with residential property, unlike commercial property, it's pretty easy to refinance when we see a dip in the rates.
When do you think the housing market will normalize, relatively speaking?
Boy, if I had a crystal ball, that would be awesome. My gut is it's going to take us a couple years to get to normalization, only because we saw interest rates not only increase, but increase at the fastest rate in nearly 60 years. So it was sticker shock for folks, and I think people are still getting over that. They're also rethinking their housing. Today's need for housing hasn't changed a ton in terms of population, but the way people use their houses, there's fewer people today, for example, taking on roommates because they need more space, especially if they're officing from home.
And another factor I think may affect the housing market is the fact that more and more people are preferring to work from home, right?
Yeah, it sure is, Don. You know, some people prefer to, and I think if the pandemic taught us anything, it's that we can be productive at home. But we're also seeing people get back to the office. There's certain kinds of jobs you really can't do from home. But if you are in one of the industries that is maybe not only allowing, but encouraging work from home, well, all of a sudden your purchase or renting decision takes on these new attributes. I'm not just thinking about how many bedrooms for my family. I'm thinking about, do I have a space to conduct meetings professionally? Is my internet strong and robust? Do I have quiet during the hours that I need? So there are definitely more things to think about if you're a remote worker.
Okay, just one final question. The trend of the median home price, has it been going up, and where do you think it's going next?
Yeah, so the trend of the median home price we've seen in most markets going up. Obviously, this is the first time that the composite from Case-Shiller S&P has shown an annual year-over-year dip in a long time, but it's not that much. It's, 0.2%, so it's not that meaningful. We'll watch for a few months and see if it's any kind of a trend. But I do think that over the long run, real estate goes up in value. And when you buy a house and put a mortgage on it, the payment that you make every month increases your equity. In other words, part of the payment is interest, but part is principal. The longer you go, the more principal gets paid down until eventually you own the home. Most people don't stay in a home that long, but that dynamic is working in your favor. And for rental property, even more so because the tenant makes the payments.
Just a quick follow-up. I mean, if you own a home, you take in the account of renovations, maintenance. Would that still be cost-effective at the end?
Yeah, today those very expenses have increased. Most maintenance expenses are up, certainly with gas prices up, and maybe not up from the last few months, but up from a year ago or 2 years ago. That is a cost that is factored into everything that we do when it comes to maintaining and rehabbing a home. And then insurance. Insurance has come up substantially in some areas. So owning a home definitely costs you more than it used to. The big question is that cost benefit analysis. And in many cases, if you're going to be in a home for 5, 10, 20 years, the numbers are going to work in your favor.
All right, thank you very much today, Robert. Always great to see you.
Thanks, Don.